Welcome to the Maximizing the Treasury Management Opportunity Through Automation webinar. We are excited to have you here. It is my pleasure to introduce our presenters for this webinar. Lisa Salazar is the Senior Vice President and Director of Treasury Management Sales at TCF National Bank, a $20 billion bank headquartered in Minnesota. Lisa manages the day-to-day responsibilities of TCF's Treasury Management team, including all aspects of business development, fee deposit generation associated with the middle market commercial portfolio. Lisa directly influences and collaborates with Treasury Support Services and Product Management. She has had a 24-year banking career with more than 16 years in commercial banking. Lisa graduated from Minnesota State University, Moorhead, and has held her CTP designation since 2002. She is also a member of the CEB Treasury Management Executive Circle. Jeb Burke holds a position of Vice President of Treasury Management Product and Support Services, also at TCF. Jeb has been part of the TCF team for over 20 years and has spent the last 15 focused on growing and improving TCF's treasury management offerings. Jeb manages an elite team of product managers. Under his direction, they implement the division's strategic direction, manage vendor relationships, and enhance revenue for all treasury management products. In addition, he has responsibility for the treasury management implementation and customer service team. Jeb's team supports Salesforce CRM and the Encino Treasury Management Onboarding System for all of commercial banking at TCF. Over the past year, Jeb played an integral role in the development of the new Treasury Management Onboarding System. Patricia Tripar is the Senior Manager of West Monroe Partners Banking and Credit Union Practice, and she is responsible for developing the firm's capabilities in treasury management for financial institutions. She has more than 16 years of business consulting and technology experience in product management, new product design and development, customer experience, change management, and program office management. So we appreciate having all three of them today as our speakers for this webinar. And my name is Jonathan Rowe. I'm the Director of Marketing and Research at Encino. So the first place we're going to start is with some data, because I think we can all agree, especially those who are currently in treasury management roles, that non-interest fee-based income is one of the most valuable assets to financial institutions. And did you know, as you're looking at this graph, that over 20% or more of total revenue in many financial institutions comes from treasury services? And for those of you who were around in treasury roles during 2008, obviously when there are periods of economic distress in economies, treasury services provide that recurring and stable source of fee-based income for financial institutions. And for those of us keeping an eye on global markets and wondering if any of the slowdowns in some other parts of the world will affect the United States, it's a good reminder of how important treasury management services are for a bank's bottom line. And lastly, as we look at this graph, the growth of treasury management needs in the middle market represents a significant opportunity for banks to serve. So this is going to be one of the common themes you're going to hear throughout is the demand for treasury management services continues to grow, and at the same time it is one of the more challenging and complex processes for financial institutions. And so a lot of what you'll hear from our panel experts is how to optimize the process to ultimately take advantage of this growing opportunity. So also important to see and read data about as everyone looks through these data points is from the actual bank customer, the folks who are using treasury management to manage working capital effectively. And as you can see here, 84% of financial professionals report that Treasury is playing a larger strategic role in their organizations. So these conversations that financial professionals are having at a strategic level in terms of planning and looking ahead is now in a much, much greater capacity involving Treasury services. We can also validate that Treasury management is growing, with 83% of respondents anticipating that growth in Treasury will continue over the next 5 years. And for those who have been in the space for multiple years, you've probably seen the growth continuing or the growth occurring over the past number of years, and that growth is estimated to continue. And this data from bank customers helps further validate that. And lastly, the opportunity is that 45% of survey respondents believe their organizations should take greater advantage of Treasury to optimize financial performance. So kind of a consistent theme here that organizations are seeing strategic value in Treasury. As such, they anticipate being growing their use of Treasury services over the next 5 years. And lastly, they're seeing it as a great opportunity for their organization. So with that said, I want to pause for a moment and point out in the bottom right of everyone's webinar screen, you'll see a poll question. And the poll question involves the biggest challenges in areas, what is the biggest challenge area in your current Treasury operating model? And so this is a great opportunity to get some feedback as we go through the webinar, because some folks see organizational challenges in Treasury management. Others have the complex process involved. Other is technology. So please go ahead and select what you think the right answer is for the current challenge you're facing. Understand that you may be facing multiple challenges, but please pick one of the primary ones. Also, I'll use this opportunity to point out you'll see a Q&A section in the bottom right of your webinar screen. If you have any questions throughout this webinar, please type them in there. We do have moments where we will share questions of our esteemed panelists to provide answers. So please, throughout the webinar, provide questions as we're looking at some of the poll answers. All right, with the poll answers in place, we're now going to turn it over to Lisa Salazar and Jeb Burke of TCF Bank, who are going to share their experiences, backgrounds involved with Treasury management onboarding.
Thanks, Jonathan. It's a pleasure having this opportunity to discuss with all of you what we've been working on for the past 12 months. To give you a perspective of who TCF is, we're a $20 billion national bank with 376 branches in 7 markets, and we offer lending services in 50 states. Our Treasury management sales and support staff is in 5 markets, supporting all commercial lending lines, including corporate, real estate, asset-based lending, and equipment leasing. In general terms, our Treasury management officers and sales associates are working in the same offices as the RMs that they support, with a few exceptions where we have remote support. In addition to local and direct support to our lenders, my TM sales team relies heavily on our Treasury Management Services group for general customer service, setup, implementation, and maintenance. That team is centralized in Minnesota and is under the direction of Jeb Burke. Jeb?
Thank you, Lisa. As well, I appreciate the opportunity to be able to share some of our experiences. Obviously, onboarding has been very near and dear to our hearts, especially over the last year as we've implemented our automated solution that is sit over the top of a Salesforce platform. We've been live for about a month, so a lot of things that we might talk about and some of the benefits, we're still realizing. We have a lot of work ahead of us as well, but we believe we've laid a very solid foundation that we can build upon to continue to leverage technology to improve our onboarding process. I thought we could step back just a little bit too. I thought our story in terms of our challenges and what led to our decision probably isn't any different than a lot of you on the call, and that's probably why you're attending the webinar today. But really centered around the very manual processes. We were a very paper-intensive process that we followed here in TCF, not only with our Treasury onboarding, but as well as our lending. And as you know, implementing our products and services from the data gathering side, from our sales and sales support to the implementation and all the other groups that are associated with our setup process, it's a very difficult thing to keep track of, let alone layering again that manual processes that we did. We looked at solutions over the years. A lot of times, maybe it wasn't the right timing or the right business case couldn't be met. But a couple things changed, and really started in 2012. We took a really hard look and strategic plan process where, from our lending and our Treasury perspective, where do we want to be in 5 years? And you start to look at the growth opportunities, some of the new lending avenues we wanted to go down the path on. It started to look as well from our Treasury management opportunities, specifically cross-selling some of our existing Treasury products and services to some of our leasing customers. You started to really see that the manual processes we had established weren't going to be sufficient to support that growth. It wasn't going to be a possibility unless we either added staff and FTE, which wasn't an option as well, and at that point we wanted to really set forth a strategic roadmap to solve for some of these issues that we're encountering. We took the first step really in our roadmap, and support from our executive management was imperative, was implementing Salesforce as our commercial customer relationship management system. That started off in 2013. The next phase, and this is really kind of where maybe timing was on our favor, was our loan front-end origination system. As our team started to go out to the market and we started to narrow in on a solution that was also layered on top of Salesforce, the opportunity kind of stumbled upon us in terms of a treasury management onboarding solution that also was over the top of Salesforce platform. So it became a much more powerful message. We already had our team using Salesforce. Obviously sometimes the adoption on day-to-day can vary by lender, by treasury management person, but the one area where we had 100% adoption was entering in our opportunities that existed. Our pipeline report that was going to management on a weekly basis, you had to be in there and entering that information. It was being prepared and delivered out of Salesforce. And also the flexibility. My team supports our Salesforce instance, and it allowed us, obviously, from a configuration and being able to change, and the flexibility that the platform allowed. So combining all three of those solutions into one really started to lay a very solid business case for us to move forward with an automation. As I mentioned, we've been live for a little over a month. We did a soft launch in December, but we've been really everybody using the system and leveraging the phase one and the functionality we have. Part of that, in terms of going into that project, we really had 5 kind of strategic objectives and goals. The first was obviously a better user and customer experience. Obviously customer onboarding, meeting their timelines, meeting their expectations, and doing it as fast and as thoroughly as possible was objective. A lot of what we did, though, was in the back end, making sure that the process to gather that information and track and workflows that we developed, obviously making that more efficient is leading to a better customer user experience on the onboarding process. Another big objective really was around the risks and inefficiencies. So as a lot of people, in terms of the manual and the rekeying of information that was occurring, and the inefficiencies that causes, our hope was to reduce those risks associated with that and leverage the team's time better. Increase productivity. I think we alluded to this a little bit. As you wanted to grow, and as we wanted to grow, and as we have seen, again, having a system that can allow us to do that without having to add FT and adding the value that we've talked a little bit about and we'll get into a little bit more later was obviously a number one objective as well. The compliance side. So, we're taking this a little beyond the onboarding process. All the data specifically around our ACH originators, remote deposit capture customers, we do annual reviews. And, previously we do that, track it through manual spreadsheets, and, we prepare those reviews in that fashion. Well, all that information about the products and services specifically there was in the system already. Our goal is to leverage that data that's already there, tracking mechanisms, automated alerting capabilities, as well as then pre-populating information on those risk assessments before manually is an objective and ensure we're going to meet our standards and compliance, as well as our know your customers. So all of the information that we gather when we're opening new accounts to support our customers, we leverage the Salesforce system as well in our onboarding process. And so again, enhancing our compliance to those policies and procedures. And then finally, when we stepped back and took a look at all the manual reporting, where we're pulling that information from a product sales perspective, from a product profitability tracking perspective, as well as then we measure our implementation teams to service levels, we spent a lot of time manually preparing that information on a monthly and quarterly basis. And again, all that information is in the system. Our goal as we continue to become better at using the system and develop those reports is to move away from all the manual reporting that we did.
From a process perspective, as we mentioned, the new platform is built on Salesforce, which allows us to leverage the existing client information that is currently in the system. And that allows us really just to enter in that customer prospect opportunity really just one time. Once that client profile is in the system, my team is able to build their sales proposals and pricing performance associated with those contacts by just using and leveraging the existing client profile, which allows us to have one central view of anything that's going on in that client's world right now. Once the proposal and pricing has been approved and accepted by the customer, we can easily finish up the necessary setup requirements in the system and then transition the opportunity into our implementation and fulfillment stage. We also have the ability to flag requests as high priority or needing special attention dependent on maybe we have a really tight timeline, et cetera. From an organizational perspective, now that we've embraced some additional technology, it really does allow our team to acquire new skills and competencies, allowing them to have better career pathing and optimizing their newfound skill sets. Some of our people are embracing the automation more quickly than others, but once we're more proficient in the system, it will allow us to build out more specific roles, maybe around sales support, coordination, implementation, or fulfillment. And due to that better automation, a key to, increasing our productivity, our sales advisors can be out in the markets more. They're using mobile devices for the capture and collection of data. They're able to spend more time out of the office with customers and prospects.
From the technology perspective, a couple things we wanted to point out here that we maybe haven't been covered yet is, day one, we are leveraging the system. So as the sales teams are collecting the information required for the products and services setups, and we also are leveraging the system for maintenance requests of existing clients, is they're keying in account information and identifying what products and services. And so today's world, previous to the onboarding solution, is my team would manually key and enter all that information to our account analysis system. We are now leveraging automation and integration into our account analysis system based upon that data that's already been keyed and entered. That was a big win day one, as well as structuring our accounts. So when you're building your account hierarchy for your customer, from a family to a detail account, that structure and build is also being done automatically through interface files. The second area that we cover is approvals. Gone are the days when we have to walk around for an ACH approval or an exception or an increase in limits, where we mainly are tracking down signatures. We can leverage the workflow solutions that we are developing and continue to evolve within our onboarding solution. It can send alerts to the people, especially if it's different levels that need approval. We can add comments to that. So again, leveraging technology to make that process go much easier. Third area here is presentation documents. So, what we've integrated is an e-signature solution. So one, it starts with, based upon the request that's coming in through the system, it can identify the types of documents and forms that are required, as well as preparation and pre-populate our master service agreements, as well as some of the service descriptions that go along with what we need to require to send to our customers for signature. And like I mentioned, leverage an e-signature solution that's integrated within the solution. And finally, we touched on this before, but this is one of the inherent benefits that's going to be a big win. Again, is that leveraging the 360 view of our customers. So we have, eventually our lending team will also have the front-end system that's coming hopefully soon. But we're going to have the ability to see our customers' lending relationship, our deposit relationship, as well as in our treasury management products and services that are set up and fee income associated with that relationship. Having that one stop and Salesforce is going to bring a lot of value to our teams. And as we leverage all four of these pillars, obviously it's going to improve customer service, improve our onboarding solution. We can obviously meet those growth goals that we had talked about before without adding the staff. And we have all the data now in one system in different tools that we can leverage to pull that information out.
Next we're going to talk through some of our high-level challenges. And, when we looked at kind of the three main areas, the first being people, because we're so manual in our process, we had very inconsistent results. We also lacked visibility into the timing and the status of setups and implementation. And I'd say the sales teams lacked the understanding of how the back office actually onboarded our customers. From a technology perspective, there was a lack of workflow efficiencies, there was multiple entries of the same data points, and there's very limited collaboration amongst our business channels. And in the process perspective, there was limited view of product profitability and reporting around those metrics. We lacked the ability to view and track performance metrics associated with our SLAs. And because it was so paper intensive and time consuming, again, it just caused us to take more time than we really needed to. Now Jeb is going to touch on those challenges in a bit more detail.
Thanks, Lisa. Just to add a little more, again, we could probably talk for a long time, but high level, again, we've alluded to some of these, but very paper-driven. I mean, we were creating paper out of paper. The process of gathering that information through documentation in the paper, the forms that were required, that would come to my team, for example, and I had two groups. One group that goes ahead and implements those products and services in the various systems, and then another group that would take the other set that we made a copy and enter that into our account analysis system. As well as then we take forms and make a copy of those and send it to the various internal departments that might be required to help support that setup. So as you can tell, one, just all the paper, two, just all the different steps that are required for a setup. Now, I think we did a pretty good job masking all that behind the scenes, and we were pretty successful, but again, you can see how we might miss a step or something might sit on someone's desk. And so that was a big challenge for us, is to try to eliminate as much paper and tracking and leveraging a workflow to ensure that all steps are being met. Second, we've touched on this a little bit, but the ability to leverage Salesforce and information that was already in the system about our customers, not having to key a customer account name 3-4 times, not having to key their address or the account number. Again, leveraging the fact that that data is already there, pre-populating forms and information that are available through the system. Touched on visibility a lot, but this is a very important step. Everybody who is a user of Salesforce now on both of our teams, and we can clearly see the status of all the requests that are coming in. We talked about the exception pricing paper-based. Again, it's automated. Pricing is set up, as well as exception pricing that's set up is automated as well. Again, it just leads into, we had a lot of times, especially in some of the critical products, 2 if not 3 people involved in that setup, just to make sure that things were going to be done correctly. And so a lot of time being wasted in that regard. We talked about service level agreements. Something was going to have to give. Either service levels were going to have to be expanded to meet the growth or adding staff. So we wanted to try to make sure we're solving for that issue. And then last but not least is the reporting. Again, as I mentioned, all the data about our products, our customers, our fee income, and everything else associated with that is in one system.
And from a post-automation, the benefits that we hope to really achieve, one is a paperless environment. I mean, the reality is we're still a ways away from having a paperless environment, but we have significantly reduced the amount of paper we're creating to onboard a customer. The one-time customer data entry, the fact that we're leveraging existing information that has come out of our Salesforce platform or our analysis system has helped us really streamline that process. Our customer experience is improving. We are asking them less of the same for the same information because we've captured it once and it's in the system someplace that we can reuse. We've integrated into our analysis system, so we have far less errors associated with monthly review of analysis when we set up a new process or a new product or exception pricing. One of the great things is the exception pricing approval process has been automated. So if I have a salesperson requesting special pricing on a particular relationship, that is funneled to me for review and approval. I can do this all online. And then I could push it out even further depending on the discount level, or maybe I could decline it and send it back and provide some feedback. And we're seeing a significant reduction in errors. The automated reporting is fantastic, and the data-driven status of SLA metrics is really have improved. We have dashboards that are now available based upon your role. We have standard dashboards along with allowing folks to have the ability to customize their view as well. The workload balance is really key. We can now see who has a particular setup, what capacity they may have to bring on a new setup or implementation project, and we can better manage that workload.
Thank you, Lisa and Jeb. Those are a lot of great points, a lot of great lessons, challenges that you guys have overcome, and frankly, it's very inspirational, I think, to a lot of us who maybe have dealt with those challenges or are thinking about them. So we've been getting a lot of great questions in, and as we're kind of looking through them and to some of the points that Lisa and Jeb have hit on, for those of you who have participated in our poll that you'll notice in the bottom right there of your screen, you'll see that a lot of the stuff around process and technology especially were some of the biggest challenges that all of you have identified that you're dealing with. So Jeb, a lot of really important things that you guys have touched on. So looking through the questions, we have quite a few questions. So I'm actually going to start with the second question, which is, Jeb and Lisa, from the challenges you guys have discussed, can you describe your successes and, most importantly, the quick wins that you guys have achieved? Obviously, I think when you're making these sort of changes within the organization, these improvements, you want to get some good wins under your belt. So if you guys could just share from those challenges some of the successes and especially the quick wins you guys have had at TCF throughout the process.
Great. Well, that's a great question. I'll start. You know, again, I had mentioned it earlier, but I really do appreciate the ability to build the proposals and the pricing performance around the opportunities just right in Salesforce. It becomes a record in that customer's profile. We can refer back to it. We can have multiple iterations of it. We can share it with the team. It's a great opportunity for other sales advisors to maybe look at what someone in a different market is doing. So it really does give great visibility and great access. You know, secondly, you know, now that we have mobile devices available, and my team uses the Surface, but we're able to capture, enhance customer information through a mobile device versus filling out paper questionnaires and paper forms. My advisors can be out in the market, sitting across with their customer, capturing everything as they're having a conversation. That has really brought a ton of efficiencies to the way we collect the information, but then again, how we use it and reuse it. Because as we all know, oftentimes when we open up one account or we launch one service, that service is for multiple accounts. And we're able to just duplicate or clone just right in the application itself, and it reduces a lot of that double entry. Jeb, any other things for you?
The only thing I'll add is, we were very conscious of how we rolled this out. We didn't try to do everything at once. It was just, especially coming from such a manual environment, moving to something hopefully that, is going to make things easier. I think the biggest first win for us, and I touched on it already, was the automation of the pricing setup. So my team that does that, I think, had big smiles when we started to work on that and understanding the time and effort that's involved with them to key it, validate it. We asked Lisa's team at some point, too, before the first run of a new customer to review it. We felt pretty good about that win. That was a nice win for us. I think visibility for our probably, implementation supervisors, managers, so they can understand what's going on. We're starting to really get people to live in Salesforce, especially the dashboard, so they can understand as requests are coming in and what status they're in. They can track their urgent requests. They can see which ones are coming close to maybe hitting a service level. But that was another win. And then, this is close, and we're close evolving this, but we've created fulfillment reports. Not that we need to print these reports, but based upon the data gathered by the sales teams in onboarding the customer, we've now been able to create reports, leveraging Salesforce and some add-on apps and tools to be able to produce an output that matches exactly. For example, our online banking, most of our services hang off our online banking product, and matching the way we go in and set that up in online banking to match that flow is a big win and saves them time even on the setup steps.
Great, thank you, Jeb and Lisa. And just one second quick question for you, Lisa, before we turn it over to Patricia to share her perspective is, for TCF, what are your next steps in building blocks for continued and future success?
Well, we really consider the work that we've done so far as being kind of phase one. We've laid the foundation to continue to build upon the system. We've had some integration, as we've discussed, with Salesforce and our analysis system. However, we really do hope to integrate additional systems in the future, including our loan origination system that will allow us to have a 360-view look at the client relationships, everything from accounts, services being used, fees being captured, total credit exposure, et cetera. So we know that the opportunity really is endless, and we look forward to continuing to build upon it.
Great. Thank you, Lisa. And Patricia, we'd like to bring you into the conversation now to share your perspectives, given obviously your background in consulting and working in the treasury management space.
Thank you, Jonathan. So I've personally had the pleasure of working with both Lisa and Jeb and their teams, and along with Encino on TCF's initiative. And Jeb and Lisa, you've done a wonderful job in illustrating some of your realities and the strategy behind the last year or so of a mega effort on the bank's part to get to where you are. A little bit about West Monroe. West Monroe Partners works with banks across the U.S., not only evaluating sales and onboarding specific to Treasury management lines of business, but also from a overarching bank and financial institution perspective in the areas of corporate and commercial, as well as retail and mortgage. And what we've done is we've also enhanced and we continue to develop a center of excellence around our Encino capabilities with Encino's bank operating system, as well as specifically with the Treasury onboarding platform. So on behalf of my fellow practitioners on the West Monroe side, and I myself am a former Treasury banker, we're particularly excited with the possibilities that automation brings to Treasury management. So I'm going to take a few minutes in my part of this presentation to talk at least a high level to you about some of the trends that we're seeing in the industry and some of the most common questions that we're getting from the banks that we work with, particularly in the Treasury management space. So what is technology bringing to our industry? It's brought to bear tools. I'll have to say not a lot of tools over the last 10 to 15 years at least, but some tools. For a part of the industry that's traditionally been pretty low tech, middle and back office operations of Treasury management lines of business and on the commercial side of the bank, haven't necessarily had or been able to enjoy a lot of the innovation that's taking place in the industry for a variety of different reasons that I'm sure many people on this call can relate to. But according to our research, more banks are heading to the cloud and willing to invest in their Treasury operations if it can help them produce growth. So software as a service, for example, and cloud technology is far more widely accepted for its security, its workflow, capacity, and performance reasons than it was even 2, 3, 5 years ago. And straight-through processing is an example for the onboarding experience. As we're discovering, it's no longer a myth. It's practically unheard of for onboarding. 10 years ago, it would have been viewed as an innovation or an experiment on behalf of Treasury. And now it's really becoming table stakes. So whether you're a $3 billion bank or a $100 billion institution or a tier 1 U.S. bank, it's becoming far more common for transaction banking lines of business, commercial lines of business, to really be taking a very close look at the onboarding experience and the technology and infrastructure that the institutions have and what can be done with it to really, as Jeb and Lisa were illustrating, enhance the customer experience as well as the experience within the line of business itself. So moving documents and signatures coupled with single sign-on to systems and the use of portals is far more of a reality. And banks are really trying to figure out how to use all of these solutions and how to get them to communicate with one another, or they're researching what kind of end-to-end systems and platforms are available. So as banks grow, so do product portfolios and servicing expectations, including third-party supported offerings such as lockbox and remote deposit and corporate card. Just picturing these processes for a second, I'm sure many people on this call can. Some of this can be cloned and configured and implemented, and a variety of different things can be done on a singular or same platform. So why pay attention to this in 2016, and what do technology and automation really have to do with delivering Treasury? What we hear over and over again is that, and we see it ourselves in our research, is that banks have more choices. So for banking channels and services that can create better convenience, can reduce customer effort, internal effort, waiting times, and as I mentioned, both internally, from an internal efficiency and effectiveness perspective, as well as for end customers. And some of these platforms, Encino being a great example, can really extend way into your operations and into, the back office, allow for integrations, as mentioned, and play with your third-party vendors, allow you to potentially get into new markets or segments that you couldn't do business in before, and possibly connect better with other lines of business in the bank on the commercial side, business or small business banking, retail, and consumer. The core tenets of best practice onboarding focus on these three areas, as TCF alluded to earlier. From a scalability perspective, allowing your core competencies, skills, and people to be able to execute activities that are better aligned with their roles, as well as have the tools to be most effective. Great and flexible workflow can simplify and centralize a lot of the coordination that takes place today manually and over paper and email and spreadsheets. An organization should really be able to scale up or down, based on the underlying technology or platforms that it uses, and predictably be able to grow and manage throughput, as well as create the sustainability for this. So as an example, some of our clients simply acquire business from their markets, and that can happen pretty quickly. And they, often need better ways to migrate clients and to onboard clients without disrupting those customers' operations and with minimal disruption to their own operations. Customer-focused processes in terms of process capabilities. So not just automating old processes or bad processes or replacing some processes, but, certain types of technologies or platforms can really change the way a bank and a treasury organization can work to design process that works more around the customer and how the customers do business with the bank today. And thirdly, automation and data, which is really kind of the core of what we're discussing here today. The ability to electrify the implementation and servicing processes. What that does, by way of choosing technology, is it produces real data, data that typically resides in paper, in product setup forms, in a lot of spreadsheets, in standalone tools. And that data can be used to do things like the auto-assignment of deals and tasks to individuals or to groups. And it can measure trends over time, auto-calculation of things like metrics and SLAs can really create a far more robust reporting capability from the departmental level as well as down to the individual level. And all the banks that we talk to, really struggle with pulling a lot of data information together into, either analytics, but even more simply, just having it in one place or one system. So I think what all of this really leads us to is the better accountability for customer experience on behalf of the organization, as well as a more measurable win-win type of approach to being able to deliver value to the end customer. So what should you really expect from a Treasury onboarding solution? And I've skipped just a tad too soon. Apologies there. So for one aspect is a project management capability. And if I could ask you to envision the entire onboarding event, not just one product or a solution, but let's just say a number of different products or solutions that may have been sold and now are kind of scheduled to come through the onboarding process through to fulfillment and basically getting turned on for an end customer. This can become more of a project, less of a one-time or multiple-time occurrence, with an owner and a clearly defined set of handoffs from beginning to end, from when a customer says yes to when that customer actually is using the bank services and revenue is realized. So picture transparency and communications, notifications, and alerts. Picture a sales officer, a sales associate being able to see what's going on with an implementation, what the status of it is, having visibility into a individual product status or the entire, as I said, project or onboarding event that's taking place. And picture a single point of communication or coordination. Picture a role that has responsibility for that end-to-end onboarding event and implementation. And then picture the electronic presentation of information, such as information and data that gets collected in KYC, in forms, in the opportunity or the CRM entry itself, and the associated documentation, as well as e-signatures TCF touched on. So from a capacity management perspective, having that project management methodology or capability can really allow an organization to delineate accountability and roles. For example, delineating between sales and onboarding and implementation and fulfillment. And the ability to analyze the needs for certain core competencies over time and the skills around strategic specialization, that can become more nimble with the right type of automation, because you start to see trends then in customer information, in product usage, and in complexity data, for example. So lockbox implementations or multi-product implementations, the right type of automation coupled with the right type of analytic and data kind of reporting capability, as Jeb was alluding to earlier as well, that TCF has been able to experience in just a short period of time, can really allow an organization to be more nimble and make some changes as a result of what's changing in the customer portfolio or what's changing from a product portfolio perspective as well. So through those data-driven insights, onboarding and implementation can far more easily be tied to financial results, such as reductions in cycle time, time to revenue, and customer retention and cross-sell over time. So I already gave a sneak peek at my next visual. The target operating model, as I mentioned earlier, has an opportunity to truly be transformed. So here's a view, and in this view we can see processes and organizational alignment and how they essentially can come together to transform a business model. And an operating model, in our view, with electronically enabled touch points that I've been alluding to, and a 360-degree view of a customer is possible, as in TCF's case. And banks of all sizes and maturity are reshaping and creating their onboarding and implementation processes as more of a core to their competency and an integral part of this whole life cycle, as you can see. And, on the corporate and commercial front, some other partners in the industry, such as Greenwich or Celent, if you're familiar with a couple of those research firms, are really studying this as well. So, this is the type of thing that, from a West Monroe Partners perspective, as I said earlier, we're really excited to continue to, research how this is evolving in the industry, and really kind of identify with, what are some of those target operating models that banks are finding great success with. An end-to-end platform, we think, can really tie this together, coupled with information and data, and really provide capabilities to manage that entire life cycle, from that sales and pricing, revenue management, onboarding, through to implementation, fulfillment, and servicing. So all banks that we work with want to know essentially what tangible financial outcomes or return on investment should they be really thinking about with an investment in transformation and technology. And here are the target areas to measure. incremental revenue or improved cross-selling and upselling rates. Bank customers in our study have an average of 3 to 5 products per customer. And by simplifying or reducing the collection of data and documents and the back and forth, a client might be more inclined to repeat business. And sometimes, that can also be kind of referred to in less kind of target metrics in financial terms as a customer's initial experience or first-time experience if they're a new customer to the bank, and that experience that they have with the onboarding process can many times dictate how much more business they're, willing to do with the bank, or how easy or effortless it is to get set up and use the bank's products and services. Time to revenue by as much as 20 to 40% in terms of an improvement. So getting services in the hands of customers faster by reducing days in implementation from, say, weeks to days, and understanding where the bottlenecks are in the process. Reducing ongoing operating costs by as much as 10 to 30%. In our experience, is most often found in the manual processing and rekeying into multiple spreadsheets and systems. And capacity and complexity. The transparency into, for example, implementation types and the volume and the throughput creates an ability to plan for future capacity needs. And increasing retention or managing retention targets by, as I mentioned a little bit earlier, making the experience more seamless so that customers are essentially unlikely to leave the bank.
Great points, Patricia. A lot of important themes, data points, and so I'm looking through. We've gotten a lot of great questions. So again, thank you to everyone who's participating and continue to share questions. If we don't get to all the questions, we will send out after the webinar a list of all the questions with answers from our experts on the panel today. So Patricia, one of the questions that I think is very relevant for some of what you covered is around technology. Specifically, what kind of feedback have you gotten from financial institutions that have adopted cloud technology?
Thanks, Jonathan. So many. We could have another hour just to discuss those. But I'll touch on a couple of things. So, and Lisa mentioned something about this earlier, which is the moving from a very high-touch customer management environment, and high touch being, a number of different people involved in touching a client in a more manual atmosphere, through the paper, through email, through kind of the reiteration or the rekeying of information downstream, to from what automation brings and what cloud technology brings, right, is a lower touch atmosphere. And there is some streamlining involved with that, from a retooling and reskilling and different experiences that bank staff have, and a behavior change. So it's not the taking away of the customer experience and the management of it, it's doing it in a different way. And that, introduces some change that we all need to think about before embarking on, initiative or, the selection of, or, moving too quickly before really acknowledging what kind of impact automation in a cloud-based type of platform is going to have within an organization. Ease of use and maintainability is very attractive to the banks that we talk to. And more specifically, the concept of configuration of a tool or a platform being able to be done by the business or by administrators of the system, that takes some time to learn. So it does not happen overnight because treasury management is not a simple business. It's actually a very complex business. So not to be taken lightly. However, conceptually and in reality, features that certain tools and platforms bring that can be accepted selectively. so within releases or within the versions of technology by the business, with minimal interventions or dependencies on IT. So significant cost savings is the feedback that we get, both what banks are looking for and what they know that they're going to be able to achieve as a result of selecting the right system for them. And then another piece of feedback is there is some cost or a kind of a loss of ability in some cases for banks to be able to leverage exactingly their older legacy core systems, or for example, their account analysis platforms. But what SaaS and cloud platforms allow for is they can often allow the bank to kind of work around or compensate for some of their existing systems, because in a perfect world, you're just rehauling all of your system at once, but that's not really happening in the marketplace. It's a really long-term, 5 to 10 year out kind of play for banks that are truly looking to transform the line of business. And certainly, platforms that can play better or integrate better or however it's going to work, and this is what we hear from the banks, with other third-party and perhaps bank-agnostic offerings, and then specifically nCino as well as CRMs, for example, Salesforce, revenue management, and content management systems. The feedback that we get all of the time is that it's just really important in the selection process for the bank to be looking for, those aspects as well. And finally, we hear that, the infrastructure is cheaper, easier to distribute, cloud-based, platforms from a mobility and mobile devices perspective have become far more attractive because of their ability to integrate with other channels, and particularly if a bank has an omni-channel type of strategy for their moving forward. Thank you.
Great, thanks, Patricia. Great, a lot of great information there. So for those of you on the webinar, you can see we have another poll question here in regards to, does your bank rely on paper contracts, wet signatures, and manual processes and data entry to implement Treasury products? So you see some options there. I could probably give out some guesses on what I think the answers will be, and hopefully this webinar has been helpful with those, but please take a moment to put in your answers for where you see from your perspective today. And while we're doing that, Jeb and Lisa, I want to ask you a question, because I think we've hit on a lot of important themes today, and one of the things that obviously will be consistent throughout is the bank's customer, right? Your customer at TCF in particular. And so could you just spend a little bit of time talking about what your customer, what everyone's bank customer can expect, and what are the benefits to them directly from all the treasury management onboarding automation involved? Jeb, Lisa, sorry, I want to make sure you can hear me. So if you guys just could talk a little bit about the benefits from your treasury management onboarding automation that the customers receive on their end from what you've put together. So, for those who are attending, so they can get a sense of how will our end customers benefit.
Sure, you bet, Jonathan. Sorry about that. I think the biggest piece that hopefully we're going to get to is we're going to be much faster at meeting clients' requests. Obviously, onboarding new customers and making sure we can meet their timelines, as well as we aren't going back to them multiple times. We aren't going to be asking the same questions, hopefully even from if it's a lending client as well as us. So the goal is, for new customers, it's a much cleaner experience, it's less intrusive, and it's going to meet the timelines. The other piece that I think adds to that is if we create a better process for our sales and sales teams to collect the information, it can be more predictable. We have visibility. I think those are some things that ultimately will make it easier for the salesperson to communicate expectations as well back to our customers. So, those are some general points of the value. Long term too, as we continue to evaluate some of those additional options, such as a customer portal. I think that was not something we did phase one, but is an option of our solution. And considering some of the business cases and probably the needs and where there might be value back to the client in that regard, is another avenue where there could be some, I think, enhanced customer experience as well.
Great. Thank you, Jeb. And last quick question, then we'll wrap up. For everyone who did the poll, you can see some of the answers in the bottom right of your screen. So just very, very quickly, Jeb and Lisa, one of the questions that we got was around, specifically for you guys, what core corporate account analysis and treasury management onboarding solution you guys use. So just very quickly, obviously you guys have done a great job, so just quickly share the core CAA and treasury management onboarding solution you guys use at TCF.
Yeah, you bet. So we use our account analysis system is formerly known as Wyland, so part of Fiserv now. So that's our back-end system. We've had it for about 8 or 9 years now. And then our onboarding solution is a treasury management onboarding solution that's offered through nCino. So that's what we've gone with.
Great. Thank you, Jeb. Appreciate that. And again, for those who are on the webinar, I'm sorry, just from a time perspective, we're not going to get to everyone's question. We had a lot of fantastic questions. So as mentioned earlier, some of the things that we will provide all attendees, in addition to thanking you for your time today, is a copy of all the questions that we received. So we will take the time to go through and answer each of those individually and provide everyone with a copy of all of them. We'll also provide everyone, we've been working collectively with the group you heard today on the webinar, Jeb, Lisa, and Patricia, on a white paper that talks about a lot of the stuff we touched on today in even greater detail with case studies and data. So the Optimizing Treasury Management white paper we will happily provide to everyone, as well as a video. I think everyone agree, having Lisa, Jeb, and Patricia's thoughts and best practices and experiences and challenges and the results that all of them have seen, in particular at TCF. So really, Jeb, Lisa, Patricia, really appreciate and thank you for your time today and all the insights that you provided.
You're welcome. It was a pleasure.
Thank you.
Thank you.
And thank you for everyone who attended today. We really appreciate your time, and hopefully all of these valuable insights will be beneficial in your financial institution. So thank you.